So the first thing I wanted to do was just give you a little bit of a, we're just going to go through a little bit of background on obviously the becoming an online trader or an automated trader. Now there's really the key here is how to compete as a professional online trader. So what I wanted to do was just cover off some of the trends and developments first, just before we go into our top 10 list, just to give you a bit of background as to why this part of trading is growing so rapidly and why there's such an edge in that type of trading. Now, many of you in the past may have been exposed to things like robots or EAs. Well, this is nothing like that, obviously, with the automation that we're running. But and I'll explain exactly the difference between the two. But I just also want to emphasise definitely the trends and developments to automated trading. And it's interesting because you'll see that trading volume on the CME was 200 million in the year 1990s, and 1% of that was electronic. And as we've gone through and up to 2007, there was a rise to 2 billion, so 73% electronic. And today it's estimated to be at about 3 billion, so 90% electronic. And that figure could potentially be higher. So FX market daily trading volume is, as we know, is 1.5 trillion. And you can see from the strategies that we demonstrated on last Thursday night, that there is a huge market in the Forex, and obviously for automated trading and for trading in general. There's a huge appeal to being able to be profitable and consistent in the Forex market, and you can see from some of the strategies we've demonstrated already on the Forex market, particularly that system number 16 on the Euro Trend Trader, and also the Cycle Trader. There's a number of cycle trader strategies that are really performing well. So there is a massive opportunity to be involved in online trading, but really the key here is be very objective in the market. And one of the things we covered last week when we went through and looked at our systems, and I took the members through basically how to assess a system, how to break the system down from your normal pilot system, which we'll talk a bit about tonight. And how to make sure that if you are trading a system, so if you're system trading, that you're managing the system exceptionally well, because even though expectation that system trading is easy, it takes a lot of the emotion out of trading, and it does to a degree, there's still a lot of involvement or a lot of work that needs to be done behind the scenes to maintain the system and maintain what we like to call a high performance system. So and many of the members that are going through the program now will definitely be able to associate with that process of maintaining their strategy in a high performance environment. So there's really hasn't been a more exciting time to be an online trader, and there's just so much opportunity. And you'll see from the markets that we're going to explore tonight that there are a lot of markets that are available to us and that are performing exceptionally well with our strategies. The question is, do you have the right tools to compete with professional traders? One of the focuses we kind of pride ourselves on is making sure that our traders are very professional in the way you manage your strategy. And that's really our focus. Our focus is that you're always objectively analysing your system, that you know exactly what your edge is, and that if your system starts to come off a bit or it's underperforming, then you're the first one to know that. You should know your system, basically your pilot system and your high performance system. You should know, you should really know what's happening with your strategy and where the strengths and weaknesses are in the system that you're trading. So let's have a quick look before we get into the top 10 list of today's successful traders are very good at managing. So they're very good managers. Now, when I say that, some of you, this will resonate with some of you, because you're seeing now to be a very good system trader, you actually have to manage systems. You've got to manage the overall performance of systems, and you may be trading multiple strategies where you've got to consistently look at the performance on a daily basis of those systems. And not only just do that, you've also got to look at the systems and say, right, well, I've got some really good systems here, but how are they performing collectively as a group in my portfolio? And is there a way in which I can improve my net profit and reduce my drawdown by switching or changing certain strategies that I'm monitoring? So that's one of the things that we also focus on as well. Obviously, making sure that that we're doing that really well and monitoring our systems and their drawdown. So obviously, good system traders and good managers, they do simple things exceptionally well. So it's not about really reinventing the wheel or trying to develop the greatest automated trading strategy. A lot of the traders who go through our program and that are trading with us at the moment, and a lot of you that are basically in the Pro Trader program, what you're basically doing is you're taking the V2 strategies and you're just trying to improve that, and it can be some slight or minor improvements, but really those things that you do to improve the strategy can have a resounding effect on the overall results. And it can be something very small, like just an additional filter, or it could be something as that relates to the money management component of the way you trade. And a good example of that is the way we turn our systems on, turn them off, track them. So all of these things become part of the way we manage our systems, and doing that, the simple things exceptionally well, is really the key. Let's have a look at the management of our systems before we get into the top 10. Better system managers, or our better traders, because that's what we're talking about here. We're talking about really good traders. Now, we're talking about traders from the point of view of system managers, because with automation, so if you've got a strategy and you've fully automated it, that means you've taken away the discretion of the trading. You've taken away that human element of execution. And what you've been able to do is you've been able to say, right, well, I'm taking that away from the process that I go through, but I've still got to make sure that I have the key elements in place. So obviously time is one of the key things. Money management, so having that money management plan, that ability to generate and create geometric growth in your account, but also too being able to identify where there's a weakness in or there's a potential weakness in the strategy, or there's potentially a drawdown, and you're able to trigger off a handbrake. As many of you have gone through the money management program, you'll have looked at the different rates of decrease, so the relational, the fixed ratio, and the R brake. So there's a number of ways in which we can stop, particularly if you're in a position where you've got multiple contracts being traded, and you've experienced or you've enjoyed the fruits of a rate of increase that has gone on for a little while, and then suddenly you get hit with a drawdown. Then being able to confidently apply a rate of decrease or apply your R brake, that is a very powerful thing with your money management plan. And obviously with the systems as well, as we drill down to the systems, we want to make sure that we're able to identify our strategy, know when the system is to be traded, basically know when to turn the system on, when to turn it off. And if we do turn a strategy off, we also want to know when that system or strategy is actually starting to come back into favour, because that's one of the things that we want to keep an eye on, don't we? We don't just want to turn a system off because we don't want to turn a system off and then just kind of leave it and not come back to it. You definitely want to be tracking a strategy, and I'm going to take you through a system tonight that trades on crude oil, and it's one that we have traded in the past on the afternoon session, so it would be a crude afternoon session, and it definitely is one that has performed exceptionally well in the past, but obviously had a bit of a drawdown. And it's important to, and you'll see from the equity graph that I show here shortly, that it's important to keep an eye on those systems, because when they bounce back and start performing well again, that's really when you want to jump back in and start looking at trading those strategies. And that process of getting back into the market, there needs to be a mechanism for identifying when and where to do that. Obviously health and well-being and trading psychology is one of the things that we talk about as part of our Pro Trader program and part of the process of managing systems. And this is something that that some of you may have experienced before in looking at different systems and going from one system to another and not really having the confidence to be able to trade a strategy. One of the things that you want to do and develop up is really develop up ownership of a system, and part of that process is looking at your trading style, matching your system to suit your specific style and strategy, and making sure that your personality is factored into the system, so that when you go through and test it up, then you start to develop up some ownership of the system. Because if you really don't have ownership of a strategy, you're never really going to buy into it, are you? You're going to very quickly, it's very easy to not take accountability for things that happen with a system that you actually don't own or haven't taken ownership of. So that's a really important aspect in relation to having a system. And when you go in and start, customizing a strategy, that's really when you start taking ownership, because you're actually responsible for the settings and the configuration and what you've come up with. And if you haven't properly tested that, then that's really your responsibility. So having that involvement in and participation in customizing a strategy really means that when it comes time to see the strategy perform, then it's your system, your trading plan, your money management plan, your circuit breaker. It's all your strategy. So you're the one responsible for delivering the performance on the system. And this is one of the keys to customizing the strategies, and one of the things that we really promote. So as we go through this, as I mentioned before, good system traders are good managers, and there are 4 key components to running a trading business. They're obviously the trading business, the system, you've got to manage yourself and your money management and position sizing. So really, making sure that you do the simple things well, making sure that you have your process documented, that you've got your standard operating procedures, and making sure that you've got a daily routine that you run through. So that's really part of your trading business, isn't it? So all of those things really, they really come down to you and managing your system well. And then obviously once your system starts to perform to the degree that you've tested and you're starting to apply in the market, then you can start to really apply your money management and your position sizing and start to look at the improvements you can make and start to really grow the account. But if you let any one of those parts of your business fall over, or you neglect any part of that process, typically what you'll find is you'll start seeing the results in your system performance. So one of the keys for us as we go through this process of looking at obviously the top 10 strategies is to remember that these strategies are good strategies because there's been a lot of maintenance and management with the systems. They're not just something that, because as we know the markets are dynamic, they're not something that's just been developed up and applied to the market and it doesn't need to be maintained. So maintaining the structure and integrity of the system is really paramount. Statement at the bottom there really does sum it up nicely. And I'll give you a couple of examples. If I have some really, really good traders who are exceptionally good at managing their business, managing their systems, managing their performance. They're exceptionally good at it. And the reason why they're so good at it is because they are relentless at making sure that everything is running according to their plan, their money management plan, their trading plan, and that they follow their process and their protocols on a daily basis. And what they're doing is they're really, like you would do with any business, you're maintaining the structural integrity of the business. So all from the from getting up in the morning, checking your charts, making sure your systems are properly calibrated, making sure that your data feeds are right, making sure that is today the right day to be trading. All of these little things that really are critical to your overall performance. As I mentioned before, you don't necessarily need to be at the system or at the terminal trading, but with automation, you've still got to have that structural integrity and making sure that everything is running according to your high performance system and your structure. Okay traders, what I want to do before we get stuck into looking at the top 10 systems is I want to take you through some of the strategies that we have running and explain the V2 methodology for our system trading. So basically what I've got here is I've got an overhead that describes some of the systems that we have. We've got a trend trader, a breakout strategy, momentum pullback, a cycle trader, and the counter trend price action and volume. Now these systems are designed to complement each other, so they're designed to offer up a multi-system strategy to allow you to take advantage of different conditions in the market. For example, if we've got a trending market, obviously the trend trader is best suited, and then if the market goes into cyclical activity or starts to consolidate, then the cycle trader, based on its intuitive algorithm, will kick in and start trading. Now these systems are designed to be traded collectively, so you might be trading, say, the trend and cycle together, you might be trading the trend and counter trend together, it may be the breakout and cycle trader. So really the concept here is that it's a multi-system strategy approach, and then obviously by adding additional markets you're layering your diversification. So it's a great way to obviously apply multiple systems, and the goal, really the end goal for this process is to, as we know, is to increase our net profit and reduce or minimize our drawdown. And you'll see as we go through the portfolio management spreadsheet that once you have a look at how these systems are combined together, it has the effect of increasing our net profit and reducing our drawdown. So what I'm going to do now is I'm going to take you through some examples of the chart and give you a look at the V2 system and explain how the system works, and we're going to look at the dynamic algorithm as well. Some of the systems that we're trading and tracking, I want to give you a little bit of background as to, because we've got a mix of current members in the room and obviously people who aren't as familiar with the strategies as some of our members are. So basically with our systems are based around what we call the V2 Elite, which is basically a set of dynamic support and resistance, and the key to the strategy is the strategies are based on different phases of the market. So as the market's trading, and the systems are able to be traded based on whatever phase of the market you're in. So for example, if we have a situation like consolidation as we've got here, so we've got a fairly obvious area of consolidation. We've had a bit of a run up, and then crude oil starting to consolidate here. You've got dynamic support and resistance printing. So in this particular strategy here, you're seeing that the resistance and support are printing here, and what we want to see is basically this would typically be something where we would be looking for a cyclical type activity or cyclical type trading. So the strategies that we would probably be looking at as far as this area here would be initially a breakout or a trend trade strategy. Obviously this is a 55 tick, so you're trading a very fast tick chart, but basically once price breaks a level, so either this red, which is the resistance, and green support, we've basically got either a breakout or a trend trading kind of setup. So as you can see here, we've got consolidation, then price eventually pushes down, breaks support, and then you get into what we call a trend trading setup. and we typically run a trailing stop. It can either be our TP, which is our take profit area, which are these red dots on the short side, or we use resistance as our trailing stop, or we use what we call a swing high, swing low. So there's a number of ways in which we get into a trade and obviously take trades, but the very, very basic trend trader setup is where price will break a support or resistance area and start trading with momentum. Now, on this system here, now this is system number 3, and the reason why I kind of started with this strategy is because this is one that has been running exceptionally well for about 15 months, and it's produced on average around, I would say probably around about $7,000 to $8,000 every probably 6 to 7 months. So it's averaging around about close to $1,000 a month on average. And this strategy, surprisingly, is only trading for 10 minutes a day. So if we go into the settings on this strategy, and this is our automated strategy 9 to 9:10, this is trading from 9 o'clock to 9:10. And it doesn't trade every single day. So if I go into the automation, the strategy, you'll see that the system's set from 9 o'clock to 9:10 New York Exchange time. So it's trading New York Exchange time. It's a trend trading system, so you can see it's the V2 trend trader. It basically has a 16-point stop, so $160, and it runs what we call a four tick offset, which is 4 points above that red dot on the short side, for example. And it does not have a fixed target, but it does have a dollar circuit breaker on a daily basis. And you'll see that the strategies are designed so they can be customized. So, and from memory, correct me if I'm wrong, Steph, I'm not sure if it was yourself or I'm not 100% sure who actually developed, or not developed, but customized the system number 3. But this was one of the first strategies that we put together on crude, and initially it was traded on an 89 tick. And I'll just give you a little bit of background about the system, because the reason why it's interesting is because volatility also plays a fairly large part in tracking your system performance, as many of you would know. And one of the presentations we're going to give next Tuesday is on our volatility grid or volatility matrix, which we're developing up. And what we're seeing is that the volatility in the market is a really good example of where, or clue, or a guide as to what tick chart or what type of strategy you want to be trading. For example, rising volatility and a spike in volatility, you would be looking to trade obviously the trend trader. You've got larger movement, and you may even be looking to trade a higher tick chart or a higher time frame or a higher Renko brick, because as you've probably seen from many of our videos online, the Renko charts are very popular. Now with this strategy, as I mentioned before, this is on crude oil. It's trading 9 to 9:10, and I'm just going to run through the numbers for you here in a second. It is one of the, as I said, one of the high performance strategies. It's been running beautifully for almost 15 months, and as I said, it doesn't trade every single day. There are certain days of the week that this system is turned off. For example, we don't trade crude oil on a Wednesday. It hasn't been good for the entire time it's been tracked. So crude oil is definitely one that we would definitely not trade on a Wednesday. And I've just got some stats here on the overall performance of this system over the last 15 months, 9 to 9:10 on the 55 tick, and it's crude 55 tick, and it's overall, since this is over a 2-year period, it's produced around $21,780. Average trade net profit over that time based on the high performance strategy is 106.24, so that's fantastic on crude. Its max drawdown has been 1760, so it's absolutely flying and continues to do exceptionally well. The most recent stats on this particular strategy, it did have a bit of a drawdown in April, so sorry, in February, but these are the most recent stats. It's slowed down a little bit, obviously recently, and you'll see there that it's basically coming off a little bit of a drawdown which it had in February, but still performing well, and you can see that had a little bit of drawdown there, but it started to kick on again. And as I mentioned before, it's only trading probably 3 days a week now, and only trading for 10 minutes a day. So as far as your time in the market, that is definitely one that you would put on the top of your list for tracking, as if you're part of the membership. Obviously the GMT members would have that on the top of their list to be tracked, and I know there's a few members in the room who are actually trading that or tracking it, so that's definitely one that has continued to perform exceptionally well. Now the other one I wanted to jump onto is I wanted to go to one that's been around for a little while here, which is the DAX. So I'm going to bring up the performance report on the DAX here. Now this one has been trading for it hasn't had a lot of trades. It's had 53 trades since December, so it hasn't really had a lot of trades, but it definitely does. And its performance prior to December was around about the same as far as the number of trades, so it doesn't really it's not one of these systems that really has high turnover. So if you're looking for something that is a day trading strategy that has a lot of turnover, this is probably not one that fits that criteria. But it's the beautiful thing about this one is that it has a very, very good average trade net profit. So for those of you who like to see a good average trade net profit, that's at 189.34, and that's one of the keys to making sure that your system is going to perform and continue to perform exceptionally well in the market. You need as much fat in your average trade net profit as possible. Now the issue we have with TradeStation is that once you've turn your system off and you turn it back on, you actually lose. It'll only hold the 6 months of data that's cached up, so you tend to need to store that data, and that's what we're going to be providing our members with, just that extra data, so you can actually load your charts up and give yourself 12 months to 2 years worth of data, so you can see seasonally or through a business cycle exactly how these systems run. And you can see this one here. This has been fairly consistent over the 12 months that it's been. 6 months has been tested, and the 6 months of live trading, so it hasn't really strayed from these results. But as I said before, it's got a good average trade net profit. The win rate is higher than we would typically see on the and this is the breakout trader. So this is one of our other strategies, and performing exceptionally well. The longs are doing really well at 64%, shorts at 52%. So this is probably one of the highest win rate strategies as far as the duration of the testing that we've done. So because what we're really looking for is we're looking for a higher profit factor. So we ideally want to have 2 to 1 or better. So we're not really interested in systems that are running 1 to 1, because there's too much potential for those to really get knocked down on their average trade net profit, and slippage, commissions, and things to really erode the overall performance of a strategy when you've got that. Now I'm just going to load up another chart here. So that's the DAX. So we've got crude. and I'm just going to bring up one here that has been an absolute solid performer. Now, I did mention about volatility before, and I spoke about a system that has been running well, and this one has been running really well, which is coffee. Now, coffee was originally traded on now this is system number 45, and coffee was originally traded on an 89 tick chart. Now, what we found with coffee was that the volatility of the daily chart was such that it really, and I'll just bring up a daily chart here, or I won't actually, I'll just leave this for a minute. The volatility of the daily chart had us looking at a fairly strong decline in volatility, and we're going to cover this next Tuesday anyway. So we'll take you through the volatility analysis, because coffee during March and April started to have a fairly strong drop in volatility, and we were trading the 89 tick chart. Now, just through some analysis, we dropped that down to a 55 tick, picked up exceptionally well, and the 55 tick has started to be a very, very solid performer. If you have a look at our periodic returns, if you go month by month, you've got our recent months, January, Feb, March has been really good. April was exceptional. So dropping, this is when March and April were when the 89 tick, which was our solid coffee chart, started to drop off. We switched it down to a 55 because we knew the volatility was dropping. So what would the other thing have been that we could have done with coffee? Could we have actually, instead of just dropping the tick chart down, could we have looked at a different strategy? Obviously, if we've got the trend, the breakout, the cycle, the counter trend, the reversal, what other strategy could we potentially be looking at if we get a drop in volatility on our systems? And this is one kind of more for obviously the GMT members. But what strategy might we apply if we get a sudden drop in volatility that might assist us in basically improving overall performance and looking at being able to trade through a drop in volatility? So that's right. So the cycle trader would definitely be one that we would look at. We could basically look at a number of different options, but the cycle trader would be either dropping the size of the tick chart or going straight to the cycle trader. They would be the absolute two things that we would do to make sure that we've at least not exhausted all options, because even though a market starts to drop its volatility, it doesn't necessarily mean that you're missing an opportunity. And you'll see from the analysis we do Tuesday that you can develop these strategies up. So you have strategies for different volatility phases in the market. And what that means is that you might, for example, have settings for the 55 tick that's running, say, an 18-point stop, but then when the volatility picks up, you might push that stop out to, say, 20 or 25 points based on your previous trading or testing of rising volatility. And a good example of that was when we were trading the DAX on the 987. The 987 chart was going really well, produced probably 13 or 14,000 euro, then started to go into a bit of a drawdown. So the volatility was rising, so we pushed the tick chart out a little bit as far as the stop, and by widening the stop, we're able to maintain the 987 cycle trader, but also to just push it out enough to get us away from the increased volatility and getting stopped out of those trades. So just some little things like that can help obviously overall improve your system performance and just manage your strategies a little better. So you can see there that the coffee has been a consistently good performer. July, it's up again 12.50, so performing very well. A little bit sideways at the moment. So the other thing I wanted to show you today was basically a system that has come through, and I'm going to rank these strategies based on the number of trades and the average trade net profit. So one of the things we're going to be looking at is obviously the total net profit. That's one of the keys. But at the end of the day, if your average trade net profit is not high enough, then it doesn't really matter how much money this thing has made. You're going to struggle to be trading this in real time, because you know, with things like slippage, particularly if you're trading a breakout strategy, a trend trading strategy, something that's relying on the market to have momentum and volatility, then you'll potentially, you can potentially get a couple of points of slippage, and that average trade net profit can really be chipped away. So one of the other strategies or systems that I want to take you through, this is one that has recently been sent through, which is on a market that some of you may or may not be familiar with, which is the Eurobond. And for those of you who have been looking at exploring markets outside of the US, this is definitely one that I would consider having a look at. I'll just move this out of the road for a second, because this particular system or market has been running well for the last obviously for the entire period of this year, and continues to perform well, and it really hasn't missed a beat. So this would be one that I would definitely put on the radar for inclusion into your watch list to be tracked and traded, because it's starting to really perform exceptionally well. And it's definitely one that, as I said before, with a good average trade net profit, it gives you access to a market. If you have a look at the volume at the moment on the Eurobond, you'll see that the volume is 523,000. 523,000. So you've got very, very good volume. If you compare that with the volume on crude at this stage of the I think you've got running at crude, and I'll just have a quick look at that so we can switch over to crude, and we'll just quickly just move this out of the road for a second. But crude is typically running at around about 30 to 40,000 at this time of the day. So it's a market that, if you are trading the Euro session, you are up during the European Open, then it's definitely one to add to your list, and potentially offers you the ability to be able to go into a market where there is exceptional volume and liquidity, and be able to trade larger lots, and really start to utilize the money management position sizing model that you have. So for those of you who haven't seen the Eurobond before, that one is a new strategy that we'll be uploading to the site, and I'll be ranking that as a system, and you'll be able to download that too. So the other market I wanted to talk to you about was soybeans. Now, I'll just do a quick check. Is anybody actually trading soybeans at the moment? So Scott's just mentioned there that the crude's running at about 41,000 at the moment. So yeah, there it is there, 41,116. So it just gives you an idea, particularly, I mean, obviously when we're in crude, when we're looking to trade crude oil, we're looking to trade crude oil at the start of the US session. So there's pretty good volume there, but at this point in the day, you haven't got huge volume. So if you're looking to go in there with 10 or 12 or 15 contracts, you're really going to start to potentially get slippage on that market. So if you are looking to open up your strategies and get a little bit more a little bit better fills, then that would definitely be one to look at. So for that, we'll just do a quick check in the room of the members. So we've got crude oil. We've got soybeans that's been running exceptionally well. It has taken a little bit of a dip, and I want to talk a little bit about this strategy, which is system number. We've got soybeans 89 tick here, and the reason why I wanted to chat about this system is that if you have done the work on a system and obviously tested it up and gone through and developed up your high performance system, regardless of what you've done, you still need to make sure that you have your circuit breaker in place. So even if you do start trading a strategy and you're turning, you're going in and you're looking at the days of the week of the longs versus the shorts, and you're analysing the system performance, and you're finding that you can turn different days of the week off, or different days longs versus shorts off, you've still got to make sure that at some point on your system, whether it's your pilot system or your high performance system, and I'll just explain what that is. For those of you who are unfamiliar with the term pilot and high performance, basically what we do as part of this process is we go in and we test up a market based on a strategy that we've got, the trend trader for example. And once we've tested that system up, what we do then is we basically have what we call a pilot system. So it's a system that hasn't really been validated in the market. It still needs a little bit of optimization. It can still be potentially improved. The performance may be improved. And the way we would improve the performance would be, we would look at obviously the days of the week and the longs versus the shorts. Because if I quickly look at this DAX strategy here at the moment, I can see that there is a definite imbalance between the shorts and the longs. So the longs have been going exceptionally well. The shorts have made half the profit than the longs. So most of the money on this system is coming on the long side. So if I then look at the days of the week and I go in and look at Monday, Tuesday, Wednesday, Thursday, Friday, I may be able to filter out one of those days that just is not performing well. And the example we gave was crude oil. Crude oil has been running well, but there are certain days that you just don't want to trade crude oil on, and one of those days is obviously Wednesday. So when we do our initial testing on a system, we don't actually do any. We just find settings, standard vanilla settings that work well, that produce a profit, and then what we're doing is we're then maintaining that pilot system and tracking that system going forward. But what we then do is we do a fair bit of optimizing, or not optimization, but we analyze the system to see where we can improve the system. So what part of the system is underperforming, and whatever elements of the system are underperforming, we turn that off. So for example, if we go into the strategy and we find that, so if I open up this, if we find that say Mondays is very, very poor, or say Tuesdays is very poor, we'll turn that off. But what will happen is eventually we'll get results that are giving us the best performance on the system, so what we call our high performance system. And it might be that we end up trading Monday, Tuesday, Thursday, Friday, and we leave Wednesday off. So once we get our high performance system, we still have to track our pilot system, because we need to know whether Wednesday is ever going to start performing well again. And if it does start to perform well, we want to turn that back on. So when you are trading and tracking your systems, you definitely need to have, and I've mentioned this a couple of times in the room, you need to develop up your pilot system, which trades in simulation and tracks every single trade, longs and shorts. And you also have to have your high performance system, the one that you've customized, the one where you've taken out the poor days, or the, maybe it's not performing very well on the longs. And I would definitely suggest, if you're just getting used to this whole concept of pilot and high performance system, that you go onto onto YouTube and have a look at our last presentation, where I spoke about the pilot system and the high performance strategy. And I would definitely suggest that you have a look at that, because really there is a huge amount of value to be gained by analysing your system at these three levels that we talk about. So not only looking at your pilot system, but drilling down. But one thing that Steph mentioned today, which I want to cover off on before we go any further, is I want to basically just mention that if you are trading a system, and this is one of the things a lot of us get kind of forget about, if you're trading a strategy, you absolutely need to have a circuit breaker. Now, most of us think of circuit breakers as a percentage of your overall portfolio, but I would suggest that you probably want to be a little bit more diligent in your managing your systems, and you can do much better if you manage your systems from a drawdown perspective as far as a dollar amount or an R value amount, and also looking at your systems from the point of view from your pilot system to your high performance system, because either way, no matter whether you're tracking your pilot system or your high performance system, you have to have a circuit breaker. Whether, now for example, just let's assume that this is my high performance system. So I've got my high performance system here, and you can see that the max drawdown on this account is about $1,000. So it's about 1612, or it's about $1,000 here, trade close to close. So, however, on my pilot system, if I'm running my pilot system, if I turn all the days of the week on, then my drawdown might be, say, $3,000 on the pilot system. So what I'm going to want to do is I'm going to want to have at least one of these strategies that turns the system off, because I don't want to, I need to have a point at which if I'm having losing trades, or if my system's underperforming, I need to turn it off at some point. So you need to put a line in the sand and say, right, well, even though I've really done a lot of work on this strategy and I've got a high performance system, and I've taken out all the bad days, or I've taken out the bias where the shorts aren't working or the longs aren't working, I've still got to make sure that I actually apply my circuit breaker. Because if you fail to do that, then all you're doing is you're opening yourself up to more losses, because what you're doing is you need to have either, you look at your pilot system max drawdown, which might be, say, $2,000 or $3,000 in our example, and if your high performance system maximum drawdown is $1,000, then, and you decide, well, that's what my circuit breaker is going to be, then that's when you have to turn your system off. You don't want to trade your system so you're continually analysing Monday, Tuesday, Wednesday, Thursday, Friday's drawdowns, and you're waiting for each of those days of the week to hit their max drawdown before you turn it off, because each of those days of the week might actually have a $1,000 drawdown. And if you isolate your drawdown to a day of the week and allow each one to hit its max drawdown, then you actually are trading outside the parameters of your system. So you've got to make sure that overall your system is running on a higher number of trades. So if you're analysing the days of the week as far as a drawdown, that's great, but you've also got to have your high performance system or your pilot system running your overall max drawdown, and that turning your system on and off based on your analysis. So it's great to look at your days of the week and analyse how your system's performing, but you shouldn't solely base your, whether you're trading or not trading on that. You need to take into consideration your pilot system and your high performance system, and work out whether your system should be trading or not. And you can see from this example here that this system is just slowly, it's not giving you a lot of trades. As I said, there's not a huge amount in this as far as opportunity. So if we were looking for something that had a little bit more life in it as far as opportunity on a daily basis, this would be something that would be a slower move, a good performer, obviously good average trade net profit, very low drawdown, good to add to the portfolio, but it's not going to take a lot of trades. Whereas our system on the Eurobond, almost up to 100 trades, only been trading for 6 months. Crude obviously is trading not as much, but you've got coffee that trades more frequently. So you're going to have systems that are going to trade more frequently than others, and the key is making sure that your combination of systems are put together really well. Now, that's really all we've got time for tonight. I'm going to finish this off on Thursday night, so I've got some really good. I've basically covered five systems tonight, or 4 systems, because I haven't gone completely gone through Soy Beans. But I'm going to finish this off on Thursday night, and I'm going to take you through how to put the systems together and which systems are running exceptionally well together. And what we're also going to do is we're going to have a little look at combining the Forex strategies with the futures strategies and seeing what kind of an impact that makes. Because as many of you have seen from the Forex presentation we had on Tuesday, or last Thursday I should say, there are some super strategies running on the Forex market. You know, you've got system number 16, the Euro Trend Trader, you've got the US dollar Swiss, you've got the Euro US dollar reversal, you've got the pound US dollar that Yarn put together on the cycle. So there's some really, really good strategies that have got a very good average trade net profit. And if we combine those with our future systems, we've got the ability to trade these multi-system strategies, which is what I'm going to talk about in more detail on Thursday night. So tonight was just a little bit of an introduction, a little bit of a walkthrough of what of some of the top 5, and then I'm going to cover off on the remaining top 5 on Thursday night. Take you through obviously the multi-system strategy, so how to combine the systems together, what to look for, why there's such a huge advantage in combining multiple systems together and how that can improve your overall performance, and how you can do that on a smaller account. So one of the keys is obviously one of the challenges we face as traders is being able to trade on a smaller account and combine strategies. So there is a way to do it, but it's just making sure that your system integrity can be maintained. And I'm going to talk to you a little bit about that on Thursday night. So before we finish up, do we have any questions? If we don't have too many questions, I'm going to I'll be loading the Eurobond on Kajabi. That's one from Giovanni as well. So that's a great little strategy. As I said, it doesn't trade a lot, but it's definitely a solid performer. And the great thing about this is the drawdown is nice. The drawdowns occurred here. You can see there that 17.2. So as you start to look at putting these systems together, you've got a drawdown at 17.2, largest drawdown there. This one is on the 3rd of March, so you've got a nice combination there. The DAX drawdown occurred in December. So you can see there just visually from looking at these systems that by looking at your date of max drawdown, you're actually getting a nice little spread across just very small futures markets. So in the coming, as I said, in Thursday's session, we're going to talk a lot more about, you know, combining the systems together and how we can get the most out of the strategies as we apply that to the market. So any other questions, guys? As I said, I'll be loading the Eurobond up on Kajabi with the settings as well. So for those of you who want to potentially construct that chart into multi-charts, that'll be available for you as well to have a bit of a play with. So thank you for your time. If you do have questions, feel free to send me an email, shane@gmtfutures.com, and I'm more than happy to answer questions about the strategy and the systems. And for the members, obviously you'll be able to access those in the members area. And looking forward to Thursday night as we get more into the other top 5 strategies, and we start looking at putting these multi-systems together. So really the idea is there, if you have a look at the markets that are being traded, your goal is to combine systems together to reduce your drawdown and increase your overall net profit. So thank you very much, everybody. I look forward to chatting with you on Thursday. So I'm going to send out a link tomorrow for the webinar for Thursday, so that'll be part 2. And then obviously the following Tuesday we're going to be talking about the volatility matrix and how we can use these systems to construct slightly different settings for changes in volatility. So we're building a little bit of a grid of systems. So thank you for your time, everybody, and we will catch you on Thursday. Cheers.